Hey everybody, and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today, another BananaRama round where we take Cramer's Mad Money Lightning Round stocks. We add in some analysis, we add in some stock charting, and then we pool all these things together and form some interesting conclusions. I hope you had a great last week. If you hear any weird noises today, it's because it's raining outside, which is fantastic, as I live in Southern California and there is a drought going on. So with that being said, let's start the show. JetBlue JBLU, Kramer says all the airlines are going higher because now we know that oil has taken another step back, and it's a step back that we didn't count on, which is true. Oil has stepped back, but it doesn't necessarily affect the airlines right away because it depends on how they negotiated their contract for fuel. Normally it's negotiated months and months in advance, and so really it has like a trickle-down effect. So the immediate analyst ratings are for 10 sells, 6 holds, and 1 buy. So no one really advocating for JetBlue. In fact, most recently was a downgrade down to $28. So if we look at our chart here, we see that that downgrade as a target was pretty much just slightly above our current peak, and that if we look at our long-term parabolic trend here on the weekly, we've actually smashed through it recently in the past week with a lot of volume. So it's really gone down quite heavily to the point that that trend is pretty much wrecked at the moment. It's not going to suddenly rebound and take that back up. So let's take a look at the daily. And I would say that the fall is not over, unfortunately. So if you are holding on to JetBlue, then you've got a little ways down to go before you're really going to see a reversal, I think. Certainly, we're looking at a support diagonal line in around the 23 range, and a Fibonacci support line also in the 23 range. And if you look at the RSI, you can see that it's not showing oversold yet. Oversold. Same thing with the stochastic. So we're still got a little bit of a pullback in JetBlue to consider. Certainly no yield in the dividends either. So if you're holding it, you're holding it long term. And if you're looking for an entry point though, pretty soon in the next couple of weeks, then you should have a decent entry point to take a look at. But certainly this big gap down with a large candle is something to let it breathe for a little while. TransoceanRIG. Kramer says, what we care about with Transocean is that it is really linked to a very bad business, which is deep water drilling. I think it's going to come down to the doldrums for a long time. Can it pop up from 13 to 16? Sure. But anything above a couple bucks, I'm saying sell, sell, sell. So, and that's what analysts are saying as well. 14 sells, 7 holds, 1 buy. Most recently underperformed, target of 13.5. But really, you're not holding this for the medium term or the long term. You're really holding this for the long term. And you're probably holding it for reasons that you don't want to be, I think, at this point. Because obviously oil is struggling. Deep water drilling is the most expensive kind of way of acquiring oil. There's a lot of risks involved. So I think if you're thinking Transocean, you're thinking of how do I get out of it in the short term with as minimal damage. So kind of what Kramer said. If you can get into that 15 region and press up against this resistance line, that's probably as far as it's going to go without some serious news. So that's where you're really looking as an out. I would be concerned for anything that gets below this kind of 12 line that we're headed towards currently, because that means that we're going to start a whole new downtrend, and then it's just more pain from there. So looking for your pop and getting out unless some logical reason comes in to help boost it. Sprint S. Kramer says, you're really at the mercy of a very large investor who may or may not want the dawn of a new day. Kramer prefers T-Mobile, thinks it has bottomed at around 36. After what a lot of people thought was a mediocre quarter that he thought was not too bad, he's a big fan of John Legere. So not too much love for Sprint, basically the ugly stepchild of all the mobile providers. Not a lot of love on the analyst side either. 6 sells, 13 holds, and 2, with the most recent being equal weight of 4. Looking at the chart, we are in this happy little channel here, and have been for the last year, which basically is a slowly moving down downward trend. We are currently at the lower support line with some stochastics that say, like, for at least the medium term, we're going to probably rebound a little bit, maybe up to 4, but I don't see it really cruising past 475 unless there's a logical reason for that to happen, and really that's only something like a buyout, which are impossible to predict. So play within the channel is about the only play that I could suggest. Certainly you would be concerned if it breaks that lower support line. Wells Fargo WFC. Kramer says, we have a giant position for my charitable trust in Wells Fargo. I like it very much. We're just going to own it for as long as the eye can see. As long as John Stumpf is running it, we like it. So analysts like it as well. 3 sells, 11 holds, and 15 buy ratings with a hold at around 51 through 59. So a little generous on the hold there. Currently, we have a 5% basically, or sorry, a 4.2% haircut on the stock in the past week, which makes it feel like a buying opportunity. We're pressing up against this first support level with the lower support level around 51. If it were to hit that, that would certainly be bonus. But let's take a look at the daily and see if there's a more suitable entry point. On the daily, you can make the argument that it's already starting to run out of gas after its big drop off here in the last couple days. So it's headed towards this lower support level. That could be a buying opportunity as evidenced by our stochastics, which are starting to round out at the bottom. It's certainly for a stock of this fundamental value. Even if it did chase that 51 support line, it would still be a value product that would, I think, pay off in the long term because it is such a good and properly run company. So something to think about. Annaly Capital Management, NLY. Kramer says it's reaching for yield, and we are not going to reach for yield in this show. We are not reaching for yield with the Fed starting to tighten. Sell, sell, sell. In contrast to a lot of analysts who are saying hold or maybe buy a little bit. Most recently, they've just been saying hold, the neutral around 11.5. If we look at the chart, we can have, we see a fairly substantial drop-off actually, particularly in the last couple of weeks. I assume as the Fed is nearing to tighten, this is influencing how people are thinking, which is primarily what you get in stock charts. A picture of how people are thinking. We're cruising towards this lower support level. If you believe in this stock, it would be a buying opportunity, but Kramer is saying sell, sell, sell in the face of the interest rate hike. So what you're probably looking at for this line is whether it is held or whether it is broken. If it is broken, it is a long way down. All right, Twitter, TWTR. Kramer says, my charitable trust has a small position in Twitter. Why do we keep it? Well, it's a placeholder. We think they have a lot of potential. Things like Periscope are very interesting products, but there is some concern overall. We think those products could lead to a surge, so we hold it. But we're not pounding the table for it. So basically what I garner from those comments is they know it has a lot of potential, so they keep some, but they don't know when that potential is going to bloom into anything, and they're not sure if Twitter will really get it together to make all that product actually profitable. From a ratings standpoint, we have 3 sells, 24, 18 on the buy side, so we're leaning towards buy with the most recent buy of 36. If we look at the chart, this is a bit of a messy chart because I preserve all my lines from previous shows, so you can see actually how they validate as time goes on. Which I think is kind of a cool aspect of stock charts. You can draw things in the past and have them extend to the future and have it magically come true. Anyway, I had a covered call on Twitter, which I do own, for Friday, which is at 25. On Thursday, I was a bit concerned that that was going to bust and I was going to lose out on some profitability, but it nicely settled, as it normally does, back down to 24.84. Excuse me. For me, on a personal level, I'm starting to get tired of Twitter, riding this roller coaster up and down. I really think they can get their crap together. I think they have a point, like a purpose and a ecosystem to exploit, but they seem to be doing it in such a terrible and awful way to generate profitability. I really am getting more and more frustrated with the mobile app, which is my primary way of using Twitter. So if I am frustrated as someone who actually works in software, then I can't imagine it's very enjoyable for regular folks. So I am potentially considering moving on, otherwise lowering my position to that same sort of like, I'll hold it because it has so much freaking potential. Skechers, SKX. Kramer says, I think we have to take a little longer term look at Skechers. Remember, it was up gigantically, then it sold off, then it was up 65% for the year, and then we shouldn't panic after just a couple days down. I think if we take a longer term view, then there'll be some profitability there. Analysts tend to agree with a buy rating of 10 people buying and a buy rating of about $54 most recently. If we look at the chart, $54 exceeds its maximum when it was performing back in August, really kicking butt back there. It has since dropped off like crazy, now finding this new lower support line here at around 25 and hovering in this kind of medium range at 30. Because this is such a dramatic drop off, we need to look at the daily chart to try and figure out more about it. On the daily for Skechers, I would say there isn't really any reason to get too excited about it, but it does provide us our support and resistance so that we understand where we can target. So right now we're in this nice symmetrical channel. So we have the lower support line and the higher resistance line. We're probably going to slide slowly back down to this line at 26.27 without some sort of push, some sort of news to stoke the fires. And if so, then we would challenge that 32 line. But I expect for probably a few months, we're just going to bounce in between those lines until we get to the next earnings report, because that's where we'll have the new metric for whether there is a resurgence or whether this is a long-term downtrend. 3D Systems, DDD. Kramer says, I have hated this one for 50 points. I should have hated it for 100 points. It's just not my cup of tea. Analysts, though, are saying, hold it. Maybe a little buying, so the 15 holds. Recent target is a buy at 15. For me, I've always wanted to own 3D Systems just because I really like the technology. I think it's cool. And I've just watched it go down and go down and go down and go down. And I feel for anyone who is in it, it must be a horrible ride down. As evidenced by the chart, I never did pick it up and as anything more than like a daily play. But it is in this long-term parabolic downtrend. It is pressing into the very, very tight, close confines, which would usually indicate some sort of short-term pop up, at least out. And the rating said 15, so I think that's conceivably possible. But I think at this point, because there's new competitors coming in all the time, the technology is getting cheaper, that it's really dangerous market. I think HP is making their own system. So I would be very concerned. And if you were just looking to get out, look for some sort of pop-up, which should be coming in the next little while. FedEx, FDX. Kramer says they are crushing the transports, just crushing them. We've got to give them a couple days off, but my favorite one here would be UPS when it yields 3%. It's at 289. So for FedEx, we have 8 holds and 11 buy ratings. So we're all leaning towards a positive trend here. Certainly gas prices following is also a positive for FedEx. Most recently, we have a lot of reiterating of holds of 160. If we look at the chart though, wow, we have taken a bit of a kicking here in the last few weeks, plummeting here down to the 144 level, losing 7% just last week with a big candle. This is 2 big meaty candles here, probably related to how the interest rates are going to go up. I haven't looked at specific news for this, but from just a standard stock charting perspective, we are at a critical support line here. So anytime that you have a support line that's defined by 2 previous peaks in a previous uptrend and then reinforced here, it is a critical support line. So it's either a buying opportunity if you would like to get into it long term and believe in the stock, or it is somewhere to just keep your like big goggles on, because if it falls through this, it's going to fall for quite some time. I would suspect it would define a new trend. So just keep your eyes out on FedEx. All right, that's our show for today. I hope you've enjoyed watching. If you enjoyed the show and the series as a whole, please subscribe. It's really important to raise notoriety. Also comment or share or like. All of these things are important and do a great service if you can. So I hope you have a great week, and I'll see you again next week.